Hey there, everyone. It's Kim, and I want to welcome you back. Yesterday, I did a video on what caused me to lose 7 trades in a row. Actually, it was 7 trades. All 7 were losses. And the main reason was there was lack of follow through. And today, I want to show you the other side to that. When you do have follow through, how you can make money trading Forex. So let's go ahead and get started. First, I want to talk about today's trades. I took 11 trades today. Yesterday, I took 7. As you know, if you watch the video, I'll put a link into the notes here below. All 11 trades followed the criteria, just like all 7 trades yesterday followed criteria. Only 3 trades today ended up losing 26 pips, and 8 trades were winners for a total of 162 pips. And that gave me a grand total of a net profit today of 136. You can see that I have recovered all of my losses from yesterday, and now I'm in a profit position going into Thursday's trading, which is great. I trade 3 days a week, Tuesday, Wednesday, Thursday, so I'm happy about where I am right now. But let's go ahead and talk about why did those trades make money today? And the one thing I said was there was actual follow through. Remember, market risk, it's one thing that can really throw a trader off is lack of follow through, which we saw yesterday. And it can also throw a trader off when there is follow through. Follow through, remember, is a term used to describe price action that moves in the overall direction of your trend. So this is for traders that don't really know, or maybe you're new. Follow through on a trade is so important to your success that misunderstanding it or not using it will derail all your efforts to become a winning trader. Let's take a look at 3 of my winning trades today, and I'll walk you through my thinking because these 3 produce the bulk of my wins today during the New York session. So the first trades I'm going to start with each one of these pairs is the USD CPI Red News event. 30 minutes before our planning session, 8:30 a.m. Eastern is when this news event is released. It was a beautiful, great move. You can see nice civil move, no swinging, price action isn't spiking. I got long right there using a 10 pip stop, and I was targeting up here. The thing with this trade was I had to see this candle, the news candle, break and close either on this breaking line or outside of it, ideally. You can see it push through it, but when it came to it, what happened? I had to close the trade because it didn't break outside of the range, or close outside of the range, I should say. It did break. It didn't close either on the breaking line or outside, so I ended up taking +7. We'll see on the next screenshot what that looked like. So here was that CPI trade I took. You can see it sucked back, and I ended up coming out with +7. Now, there was another range created by this news candle, so I bought the break here for another long. The dollar was really weakening across the board, as we saw during our planning session, and my strategy today and that I shared with the members was, let's look for dollar weakness. That's where my focus is going to be. And this trade ended up being just a great trade, ended up taking off, closing outside of the breaking line, and then continuing to ratchet up. And this trade, I worked it using a protective stop, which I made a video about, which I'll probably put out here on YouTube. It's definitely out on Twitter. Nonetheless, I ended up jumping out of this trade for +50, so total of 57 on the New Zealand. Let's move to the Australian dollar. Same thing, news trade. USD CPI got in long right here. Needed price action to close either on this breaking line or ideally outside of it, targeting way up here. Guess what? It didn't. So I had to close the trade and get out for +17 because it didn't close, just like you saw on the New Zealand. I jumped ahead here of myself, but you can see here it didn't close. This was the CPI that I got 17 pips on. I had an order to buy this break. I got in long. Again, right here, just like I did on the New Zealand. Same trade setups happening on the board with multiple pairs. Ended up getting into this and targeting way up there. I didn't go take it all the way up, but I did take it for 41 pips on that second trade, giving me a total of 58 pips on the AU. Now let's jump to the GU. So the GU, here we go. Third trade, CPI, red news. The dollar, it was so weak and it was so simple and civil to trade. It's what I look for. It's what I teach traders to look for in our red news trading strategy and training. This too, I was looking for price to close either on this breaking line or outside of it. Guess what? It didn't do it, but I was able to get 11 pips. We'll see it on the next candle. Here's that news candle. Did not make it outside of that breaking line right here, which was here. And now there was a new one. It created a new range. I got in that long. It pulled back on me a little bit, but then started to take off. And just like the AU and the New Zealand, I jumped out of this for plus 23. So this was simple trade plans, all showing the exact same setups, all at the same time. With what? Number one, follow through. So here's just a quick summary. 57 pips on those two trades on the New Zealand dollar, 58 pips on the Australian dollar, and 34 on the pound. That gave me a total of 149 pips. But if you remember, I got a total of 162. There were some other trades in there offset with my losses that contributed to the next round of pips to bring me up to 162. So how do you do this? How do traders get trained at Patty? Well, keeping your trading in check, you have to know your trade setups cold, meaning you have to be able to sit down at a chart because the market can move quickly, especially during a red news event. You have to know exactly what you're doing, or you shouldn't trade. Use a tight stop. I recommend 8 to 12 pips, no more than 12 pips. Know how to get in and out of the market before, during, and after a red news event. This is really critical. You saw that on each one of those three trades, the news trades, I had to exit right after the news candle closed because why? Those trades did not close either on the breaking line of their ranges or ideally outside of them. So I had to shut down those trades. And I knew what I wanted to do next. That's really important. Yesterday, we talked about watching the time of day to keep your FOMO, fear of missing out, in check. Today, we didn't have to do that. Simply because of this rule, lack of follow-through usually shows itself within the first 60 to 90 minutes on the open. Today, we saw follow-through. It was great. Okay, so you see there's follow-through. Here's my prescription. Get to work and begin managing your profits. All right? So tomorrow's Thursday. Show up and trade the next session and do exactly what your method tells you to do. That's what I'm going to do, and that's what I hope you're able to do. I want to thank you again for listening to this video. So this week we've had two videos, one on losing trades and one on winning trades. I hope this helps you with your own trading. And if you're interested in joining our group or taking our course, look for the links below this video. And again, thank you for your time. I appreciate it.